This is a download from BFM 89.9, the business station.
Good morning, Dodge. The annual Economic Policy Symposium is happening this week at Jackson Hole, hosted by the Federal Reserve Bank of Kansas City. What do you think the Fed chairperson, Janet Yellen, will focus on in her keynote speech at this forum?
Well, good morning, Ibrahim. It's going to be a big one, and the question she's going to have to answer is, does she want to appear to be hawkish or not to be hawkish this far before the actual decision in September? There have been several comments already from Fed officials and very recently hinting that there would be a September rate hike, but I suspect she's going to focus on leaving both doors to open and just allow more data to come in before she indicates which way she's going to go.
What other factors do you think that is shaping her thought process currently?
Some pretty big ones. First, a presidential election lies ahead, and the White House is no doubt pressuring her to keep markets moving forward. That's a big one. Then you have the economic good news that appears to be coming out now. That puts pressure on the Fed on the other side to increase interest rates, or else they appear to be weak and subservient to the political pressure. Ultimately, the Federal Reserve has hinted that a September rate hike would be possible, and with the Fed's next meeting taking place right before the November election, the rate hike then seems very unlikely. So this puts the Fed in a tough position now in September because the rate hike seems to be most unlikely if it doesn't do it now or in September, does not seem to occur until we get into December, and that's a long way away, and a lot can happen. So it's a fairly big decision, and these factors are going to pull Janet Yellen both to do it or not to do it. And the fact that the economic news has come out has been pretty good. You know, it's a plus and a minus. It's a plus that it looks good politically, but it's a minus because it means the question is going to be, why don't they increase interest rates if they don't?
Right. So you touched nicely on the economic news that appears to be supporting a growing U.S. economy, and you also touched on the fact that the Fed is not appearing to act on this perception. Why is it taking this long for the Fed to actually take a position and decide whether or not they want to be dovish or hawkish? Do you think this Jackson Hole meeting will be the penultimate question, will answer that question, whether or not they will take a strong position either to be dovish or hawkish?
Yes. The decision in September is placed such that whatever the decision is, it will have a more than average impact on the perception of the Fed, and it will indicate fairly clearly whether the Fed is dovish or hawkish. And right now, the economic news justifies a potential rate increase. The political pressure of being right before the election supports not moving, and so. But the Fed's going to have to act on its own, Ibrahim, and in order to appear strong and to be strong, I suspect there's going to be some real pressure to increase interest rates. Not a big move, of course, but to make that move. And now we're seeing the futures contracts beginning to increase the perception of the likelihood that there will be a rate increase, but so far, and don't forget, we're talking about this Friday, and there's still quite a bit of time before we get to the September decision.
Dodge, the employment situation for August 2016, or the jobs data report, will be scheduled to be released in September the 2nd this year. Do you think that this jobs data will shape what they think will do, what will happen this Friday at Jackson Hole?
Yes, I do, because it will be the most recent news to come out. And the question will be placed, is it strong enough to support an interest rate increase? Is it strong enough? So it's innocent until proven guilty. And you take a look at some of the economic news that we've already had. I mean, we saw some blockbuster new home sales for July. The increase shows that the housing market is still alive and kicking. It's a sign of the broader economy is still strong. The flash purchasing managers, the PMI that came out, it came in at 52.1 for August, and while there was that was down from the July 52.9, it also shows that manufacturing is expanding and that the economy is still holding up fairly well. So, again, so far the economic indicators that have come out and those that we expect later this week do support an economy strong enough to support an increase in interest rates.
Following which, the US dollar is still strengthening, and a lot of market watchers are accusing the strengthening of US dollars towards the plummeting precious metals that happened last week. Do you think that there is a strong correlation between precious metals plummeting and the strengthening of the US dollar?
Well, when you look at the time frame that we're talking about, that traders are looking at, yes, because there is very much of a commodity exposure to the U.S. dollar on the short term, and that's what we're really talking about now. And the short term is very important because we're leading up to the Federal Reserve decision and Friday. So it will, yes, there is a much stronger correlation between the U.S. dollar and commodities right now. I suspect as we clear the Friday impact, the Friday indication from the Fed, and quite frankly, Janet probably will try to keep both those open. But once we clear that, then I think the U.S. dollar will start to calm down, and there will be less of a correlation between commodities and U.S. dollar. But then again, as we get into September, you'll see that again. So there's a fluctuation between the relationship, but the shorter the time frame that we're talking about, the closer the relationship to commodities and the U.S. dollar.
The current view of oil prices is that it will persist to remain low. Do you agree to this?
Yes, I do. Saudi Arabia hiked its oil and refined product exports to the highest level for June ever recorded, 8.8 million barrels a day. They are attempting to grow market share and address their budget deficit. We also have the fact that the energy component of our WTI has been under pressure because Iraq is preparing to increase its oil exports by approximately 150,000 barrels a day. This is far more than the necessary demand that we're seeing. So I do not, and we have a round dollar amount of $50, and that perception of it staying below $50, yes, it's quite a ways away, but $50 does appear to be quite a substantial resistance area for oil for the current economic environment. Something has to improve, Ibrahim. The demand has to go up, and we don't see that. Meanwhile, we see increasing supply.
And finally, Dodge, what do you think the world will make out of the U.S. markets? How do you think they are thinking?
Oh, that's a tough one. I suspect that in terms of the markets, I suspect that the world will continue to look at high-yielding opportunities, and that the U.S. market has real estate investment trusts. It has a lot of high-yielding dividend stocks. I think there will be a favorable exposure to those because as interest rates increase, though the stocks that have high yield will also have potential capital appreciation if their fundamentals are strong. So I suspect that the world we will watch it. Now, on the other hand, we have to be very careful because in our market, we look at the emerging markets and we've seen a great deal of money. $15 billion has flowed into the four largest emerging market exchange-traded funds here. And our hedge fund positions in futures contracts have been the highest level in the last 2 years. So there is a sell signal flashing in terms of the emerging markets. So I suspect that there's going to be a balance between a favorable review of what the U.S. is doing and that it's being slow and moderating so far, and the fact that there is a reverse impact on what's happening in emerging markets and elsewhere.
Thanks. That was Dodge Dorland, Chief Investment Officer at Landor and Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.